Hello everyone, I want to show you a little video live of me reading the tapes. This is live price action. On the 1 minute time frame, price has taken out these sell stops. I want to see this candle right here close with a fair value gap. Then I would look at this as a market structure shift right here with a fair value gap. And I think that price can target these buy side levels. And also my eye is on this SIBI up here in a premium of the range. So when you draw a fib from swing high to swing low, I'm actually going to go in here and we're going to buy 5 contracts. And my stop loss is going to be placed right underneath this order block down here. And the reason it's underneath that order block is because I don't think price is going to trade through this fair value gap. And I'm actually going to put my take profit up here. We're doing a little 1 to 2 risk to reward, thinking that price will reach into a premium of the range. And the reason I have my stop loss down here is because see this fair value gap? This is a buy side imbalance, sell side inefficiency fair value gap. If price is going to trade lower, it can potentially overlap this fair value gap. So it can reprice to the low end of it, which is this candle's high. And I don't want to have my stop right beneath this low. So ICT talks about in the recent video that we want to make sure that our stop is low enough that price can trade into the consequent encroachment of this wick. So this is candle number 1, this is candle number 2, and this is candle number 3 of the fair value gap. We want to have our stop low enough to where price can trade to the midpoint of this wick of candle number 1. So we have this order block right here. I'm going to have my stop. Actually, I'm going to move it down 1 tick beneath that order block. So now I'm looking for price to start delivering to buy side liquidity. We created a fair value gap right here after taking sell stops. We do have a very slight market structure shift. If we go back to the higher time frame, let's take a look at the 30-minute. We did just take out this level of sell stops. Did actually just take this buy side up here, but I'm anticipating for price to trade higher because price is in a buy program overall on the higher time frames. So I'm going into the marketplace looking for lower time frame setups. So see this right here? This is a bearish order block. Usually, if you're bearish, this would act as resistance. I want to start seeing speed and velocity through this order block. So these consecutive up close candles, it may act as a speed bump for a second, but I want to see it just start to kind of rip through these and then take out these buy side levels and reach into this fair value gap up here. So when we do draw a fib from this swing high to this swing low, this started that movement to the downside. I'm looking at a premium of the range. This is the first sell side imbalance, buy side inefficiency that I see in a premium. So ICT tells us that the market's constantly seeking premium to discount and discount to premium. In this example, this would be discount into a premium. Within that logic, it's creating imbalances, which is something like this fair value gap, as it's delivering to a premium, and it's also reaching for imbalances to rebalance them. So this is inefficient price delivery. I think the price is going to want to retrace pretty much into a premium to reprice to this. Doesn't have to trade to the high end of it, but I want to see some type of delivery in this imbalance up here. So this is what reading the tape looks like. I'm going to show you guys a little trick real quick. If we do mark out the open of this, this would normally be used as a bearish order block. I'm using this as an inversion. So ICT doesn't talk about this much. Every PD array has an inversion. These 3 consecutive up close candles before that down move with the fair value gap. This is a bearish order block. Since price is in a buy program, this is going to potentially act as support. So it's not just the open of these consecutive up close candles, it is the entire move. So if I wanted to, I could draw out the low of it, right? You can see that it is finding a little bit of support there currently. I'm going to go ahead and pause, and I will unpause once we see what price action does next. So when price is retesting that order block as an inversion into that BISI fair value gap, that would be another potential re-entry for me. Stop loss would still be at the same point right here. So again, I want to start to see speed and velocity. I want big range candles to the upside now. And I want it to deliver past this high, into this fair value gap right here. So see how we're starting to get some speed and velocity through this order block right here? That's because we are no longer in a sell program. Price creating these relative equal highs, right? Retail's looking at this as strong resistance in this area. It's just engineering more liquidity. They're going to put stops up here, right? So I'm okay with it having a little speed bump here, right? It could even retrace if it wanted to because we're in a buy program now, and the algorithm is engineering liquidity, so smart money has an out to their long up here. So when we're identifying order flow, we want to see if institutional order flow is bullish, are down close candles acting as support? Well, we have that right here. So if we mark out the upper wick of this, see how price is just trading back down to tap this down close candle? It's doing that because price is in a buy program. So as price is in a buy program and order flow is bullish, down close candles are going to act as support. And that's exactly what we saw here. See how it created these relative equal highs. Retail's going in here thinking that this is strong resistance. It's not. It's the algorithm engineering liquidity. So what I like to do as order flow is bullish, I like to focus on the down close candles that have fair value gaps above them. So see how we have this little imbalance right here, this little fair value gap. When price retests this order block right here, because it has that fair value gap, I would look at this as a high probability order block. ICT also talks about in the new video, once price is in a premium of the range, it's not high probability to just go in there and start buying down close candles as order flow is bullish. You want to be doing that more so in a discount of the range. So this would be in a discount, and then you can see it does deliver to buy side liquidity up here. ICT also talks about in his recent order flow video, and he's been talking about this for a while, consolidation happens at equilibrium. So when we draw a fib from this swing high down to this swing low, see how we're around that 0.5? Consolidation is expected. So as price is returning down here, this would be another area for an entry, and I'm actually going to go in and I'm going to buy another 2 contracts right here. And the reason I'm buying another 2 contracts is because I'm confident that price is in a buy program. What does it mean when price is in a buy program? It means that it's returning below old lows just to target sell stops. So any retail traders that had stops beneath here and they're thinking that price is going to continue higher, right? This is an area for them to put stops at. It's beneath an old low. The algorithm is going to target old lows in a buy program just for smart money to buy sell stops. So I'm thinking that since price has returned into here, right, it can maybe consolidate for a little bit if it wants to, but I'm really looking to start getting some momentum upwards to then break through these relative equal highs right here. So see how the algorithm has engineered liquidity. It's had these highs close, or clustered these highs closer together. So retail is looking at this again as strong resistance. So now I want to see it break through these relative equal highs for retail to get stopped out and then trade into that SIBI. So 2022 students might come in here and see this fair value gap right here and think that this is a short entry. I'm actually thinking that it's going to break over that and retest it as an inversion. So I have it labeled IFVG. And the reason I'm thinking that it'll act as an inversion is because price is in a buy program. It's not going to respect bearish PD arrays. It's going to use them as an inverse. So it doesn't have to do it right this second, but before it takes out this low right here, looking for it to break above this fair value gap, retest it as support, and then deliver us into these higher targets. Now, if this candle closes within the inverse fair value gap, I'll start looking for expansion higher. So the fact that it's come back down to this BISI, and now if it closes within this fair value gap, I want to start seeing expansion higher immediately. So it can pull back down a little bit, but I want to see expansion on these next couple candles to the upside. So I did actually just set a limit order to sell 3 contracts right above this buy side liquidity. Just in case it doesn't want to kick into there, it's always good to take partials. So that is going to be at 16,014.5. And then we'll sell the remaining 4 at the lower end of this sell side imbalance, buy side inefficiency fair value gap. You can see that it is treating this inverse fair value gap as real support. See this little volume imbalance right here? What I'm looking to see as I'm watching price live is, does this stay open? So if it stays open, not saying it's going to, but if it stays open, that's something you want to hunt for as an algorithmic signature to indicate that price can continue higher. So if this stays open, then I really want to see it start to deliver into buy side liquidity. See that we're already starting to get some nice momentum upwards. You'd see price did take out this first high. Liquidity is going to be above this high as well. So looking for it to rip above that. So you can see that volume imbalance did stay open. That was a good sign, but it already kind of delivered into that buy side. So here it did set these relative equal highs. Even though it did take out this one, it created these relative equal highs here. So it's possible if it wants to retrace a little bit, that's okay. But I do want to see these relative equal highs get taken out. Again, 3 contracts off right above this high, and then the remaining 4 in this sell side imbalance, buy side inefficiency. So you can see there, it did actually take out this first buy side. What I'm going to do now is I'm going to trim my stop down to this low. So I don't want to just start jamming my stop super high up, right? I don't want to just put it right beneath this low or right beneath the low of the fair value gap because a pullback is possible. But if price were to break through this low down here, I really wouldn't want to see that since price is already delivered into buy side. So we sold 3 right here, right? Bought the sell stops and bought in the fair value gap. That's the logic I'm using here. And the idea of trailing the stop loss up is the fact that I already took partials. I want to kind of minimize my risk. So I'm cutting my risk in half now. Price should not trade back down to this low before delivering into this imbalance up here. As you can see, we just got filled right there. So this is what it really looks like to read the tape. And this is exactly what ICT wants you to be doing. Not live trading. You could obviously do the same thing live trading. I'm just using a paper account because this is just for example purposes, but ICT wants you to be doing this for months straight. And once you have the skill set, you can't unlearn it. So you see that this stuff works. You see me call it live. And when you can identify which program price is in, it gets easier and easier for the entries because price is just going below old lows to gather sell stops. Smart money's buying these sell stops. That's how I buy that exact low. What other concept allows you to pinpoint a low on a 1 minute chart? And then when price breaks a bearish PD array, we know price is in a buy program. It's going to retest that as support and deliver higher. We saw the expansion up into buy side liquidity, and it delivered into an imbalance in a premium. This is what you should be doing if you're really trying to learn these concepts, and do it for months. Do hundreds, if not thousands, of paper trades. Use Notion, journal. All these things will help you develop as a trader. So if you guys want to see more content like this, I can actually start to make videos where I'm incorporating some of the newer concepts and showing you how they work live in a walkthrough, just like I'm doing here. So let me know down below.